Inflation is both down and up, and the markets aren't happy. Let's talk about it. Hello, everybody. Joe Werber coming at you. In January, we got a mixed bag on inflationary data. Now, inflation comes in multiple different flavors. First off, we have the CPI, or the Consumer Price Index, which is typically the granddaddy of all inflation indexes, and it's basically looking at consumer prices and seeing how it's changed over a 12-month period. So when I'm looking at inflation, I want to see how it changed from the previous month to this month. Whenever you see anything in the news, it's always talking about the 12 previous months. So even when inflation is coming down, a lot of times the news will report that inflation has risen. That's because it's risen from the 12-month period, but it is lower than what it was the previous month. So in January, we saw CPI, or Consumer Price Index numbers, fall from December. However, they didn't fall as much as the market was expecting it to. It went from 6.5% in December to 6.4% in January, and the markets were expecting a 6.3% number, which doesn't seem like a lot, but it wasn't the drop they were hoping for. But what's worse, at the same time, the PCE, or the Personal Consumption Expenditure numbers, actually rose from December to January. But let's talk about the difference. The CPI is a consumer price index. That's looking at inflation from the individual's perspective, while the PCE, or the Personal Consumption Expenditure Index, is looking at inflation from a business standpoint. What's the cost of doing business, and how does that relate back to the individual, and what is the individual actually spending? And we saw that in January, people spent more money, which in any other circumstance, if we saw inflation down and we saw consumer spending up, we'd be excited. And add to that unemployment is at an all-time low, 50-year low. This would normally be amazing news. But unfortunately, as I've said in the past, good economic news is actually bad today. And as we know, because you've been watching my videos, Powell, the Fed chairman, has said that he wants to see inflation at 2%. And both the CPI and the PCE have it well above that 2% level. And while Powell has not changed his tone at any of his previous meetings, he says the same thing over and over again. I'm going to continue raising interest rates until inflation falls to 2%. For some reason, during the last meeting, the markets heard something different. While Powell said he was going to continue to raise interest rates, they heard him say, I'm done raising interest rates, inflation is under control, which it wasn't and it isn't. It's falling. Well, in some cases, it's rising. So in February, when the job reports came out February 2nd, and we saw the PCE report come out and it had risen from December, that worried the financial markets and we saw a pullback. So going into February, the S&P 500 had gained almost 9%, and since February 2nd, it's now only up about 4%, so we saw a pretty big pullback. The good news is the index is still positive for 2023. Both the NASDAQ and the S&P 500 are still positive for 2023. And while the pullback was strong, it didn't push the indices into negative territory, which is good news. And it doesn't mean that the recession, which now the professionals are saying the recession's coming. Before they were saying the recession wasn't coming, and before that they were saying the recession was coming. So regardless, there could be a recession on the horizon. Nobody thinks it's going to be a gigantic recession. And as I've said in the past, we want to see markets grow, but a little bit of pullback is not bad news. A large pullback, of course, that pushes us back into bear territory. Then we aren't truly in bull market territory. I'm not sure what's going to happen this year. It's going to be very interesting to see. Does the PCE begin to fall again in February when the numbers come out? Do we see the CPI continue on that downward slope? And will it make Powell happy enough that he won't raise rates as aggressively? People now believe at his next meeting, he won't raise rates 0.25, but he'll actually raise rates 0.5%. We will have to wait and see what happens. But here's what I believe is going to occur. He's going to raise rates because he said he was going to raise rates. Inflation's not at 2%, so the rates are going to continue to go up, and the markets will adjust to it. That's what they're doing right now. Remember, I've said this in the past. The markets are always looking at the future and they're pricing in those future events today. And when those future events happen, typically we don't see a big overreaction because the markets have already priced those in. So it's anybody's guess what's going to happen in 2023. I'm happy about it because unemployment's low, consumer spending is up, people still have cash. That is positive economic news. Could interest rates rise? Yeah, they could. We can handle it. Eventually, whether it's 3 months from now, 6 months from now, a year from now, Powell will be done raising interest rates and all of this will be behind us. But that road is still a long way off in the future. If you like videos like this, make sure you subscribe. Make sure you check out some of my other content. Leave a comment down below. Give me some suggestions for future videos. And as always, I'll see you next time.